Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 27th of October, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quite a few items overnight. Continuing with yesterday's theme, crude oil's down around 1.7%. Talked a little bit about that yesterday. The last support I have in crude is 43.20 before it pushes through the MCLV zone. I'll pull up a chart and have a look at that shortly after I do the ES. The Greece banking sector stress test said to be better than expected. So that's good news there for Europe. Merck reported 96 cents versus 91, 10.1 billion in line. Ford reported 45 cents in line, 38.1 billion versus 35.4 billion in revenue, which is better. September durable goods orders came in at negative 1.2% versus negative 1.5%, but revised the older ones lower. Congressional leaders last night at about 11:30 Central, came out and said that the White House and Congress have reached a proposed deal on debt limit and a 2-year budget. This was speculated earlier in the evening. China's foreign ministry says a U.S. warship illegally entered waters near a Chinese island, will take all necessary steps to protect its sovereignty. This is part of an exercise by the U.S. Navy to bring ships within 12 miles of man-made islands in the South China Sea. Why is this relevant? We just don't. This is another geopolitical situation that needs to be monitored. We don't know what. It's probably just posturing, but we don't know what that's going to be like. How that's going to play out. U.S. Case-Shiller just came out a minute ago. The 20-city index month on month came in at 0.11%. Versus 0.1%. This is a housing number. The house price index came in at 182.47 versus 182.26, so slightly better. Looking ahead at today's releases, we have U.S. Services PMI at 8:45. That's 15 minutes after the pit open. Expecting 55.2. Consumer confidence expected at 9 o'clock Central, just an hour from now. Expecting 103.0. This is a medium tier number. This could be a mover. We're also looking for Richmond Fed at the same time at -3. That's a low tier number. Beyond that, we have Bank of Canada Governor Lane, Deputy Governor Lane, coming on at 10:05. Bank of England Speaker Shafiq speaking at 11. We have ECB Speaker Kerr at 5 p.m. after the close. And most importantly, today after the market, we have Twitter expecting 5 cents and Apple expecting $1.89. Apple's likely to be a mover no matter what after the market closes. So keep an eye out on that. Likely to be some positioning before the close today, as folks hedge their exposure. Let's switch gears to the technical picture here. Yesterday played out almost as expected. Hypo 1 was for it to be choppy, but I was expecting it to take out. Oh, we don't like that. We don't like that purple color anymore. Let's go back to yellow. Yeah, let's make it thick. So expected a push to the naked point of control. There's approximately, I don't have the stats in front of me, there's approximately an 80%, little over 80% probability that if we open in value being this gray area from the prior day, this is considered value. The pink here is considered the point of control. That's the most traded price. That's the price that has the highest volume of the day. The blue areas are areas outside of the first standard deviation or outside of value. They represent approximately 32% of the data set that lays outside of value. We opened in value. There was a high probability of a tag of the point of control. We did not get that. Yesterday was not a neutral day. Yesterday was a normal variation day with a very small break of the IB high and a double top left behind. A very weak high to note here. We have a weak high with the point of control behind it. So this area is not completely auctioned yet. In yesterday's Trader Bite, I did talk about the strong potential of a pullback, a push lower to repair some of the structures below, and I showed the weekly market profile chart just to create a simplified outline of what that looks like. And you can see here last Friday, let's again switch to a darker color. Let's go with a nice deep blue here. So we showed that Friday was out on its own here. It gapped up and it never tagged Thursday's rally day. Thursday started way down below, way down here, and went all the way up. And Friday just left a gap underneath. And I was looking for yesterday to tag the point of control and then to roll over and start working its way down to correct that, and that didn't happen because yesterday was an absolutely boring, tearfully boring day. There wasn't much action there. We are in the thick of where we were in balance before, and I'm going to show an SPX cash index chart, a time-based profile to show that we are firmly in value from earlier this year. And are stuck here. There's just no interest from either side at this point, nothing to price in. We do have a lot coming this week. We have the FOMC meeting starting today and finishing tomorrow with the rate decision tomorrow, and so on. So it's important to keep an eye on what's coming next. Let me see the FOMC. And so there's a little bit that's on its way. Sweden's Riksbank tomorrow is also expected to make a move to ease, and that's likely to have an effect on the European markets and therefore on the U.S. markets. So we're looking for something to happen there. But overall, I'm expecting it to start rotating down and moving down into part of Thursday's action, and I think I named 2040 as the area of interest down below. We didn't accomplish anything yesterday. Well, we accomplished something every day. It's just that yesterday we just completely sat sideways. We traded yesterday inside of the prior day's opening swing. We had basically the same opening swing. Yesterday's point of control right here. Oh, gotta go back to yellow. Yesterday's point of control was inside of the prior day's point of control. So yesterday's point of control was right there, that pink line. It's inside of the prior day's value, I meant. So balance, and because we have balance, we can merge these 2 days together, the profile for these 2 days together, and we get 2064.75. 2064.75 as the point of control or the large magnet in this area. Currently, we are below yesterday's range and inside of Friday's range on the edge. And so overall, we've had some selling overnight. Let's take a quick look overnight. Again, I'm going through this to walk all of us through the logic behind the hypothesis and how it comes about. So here's the overnight session. We have selling down here. The market recovers a little bit, sells off on Europe. The European Open recovers a little bit, and then has been selling off in the last hour or so and pushing that low. And right now that low is beneath yesterday's low, which is right there. and is inside of Friday's low, which is right here. So what we have is a gap down, and the initial expectation on a gap down on balance is for it to rotate back up. So this morning, the expectation, remember we have this gap that we've skipped now. The expectation is to move up to get responsive buying, fill in this gap, start moving towards the composite point of control, this line here. Looking for this composite point of control, which is yesterday's opening swing low in the 62 quarter area. I'm looking for this to respond back to this area. If it rotates back down and holds the low of the prior day, then the target becomes 64, the 64.75 area. I'm looking for it to go to 64.75, chop around in here, and then potentially cross to start pushing back up. That's hypo 1. That's the most likely scenario. The secondary scenario is that it does get responsive still and is not able to get into the prior day's value, is then deflected back by sellers and then starts walking its way down to the 45.50, down to the 40 area. This LVN down here, and that would be hypo 2. Hypo 3, it opens a very feeble attempt at going higher, takes out the overnight low and starts to drive downwards. If we do get a drive downwards, then we're looking at 2031, the 2030 to 2031 area. Remember, this is the MCLVN that we left behind and broke through last Thursday. That would be the target. If we have a driving type of behavior, we would have the energy to push all the way down to 2030. If you get on a short in that scenario, you'll want to, in my opinion, will want to hang on for a big drop. So those are the three hypos. Hypo 1, again, responsive buying, hold the prior day's low, then push to the point of control. If it pushes to the point of control, it's likely to go to 2069, which is the naked point of control above that we could not take, and value high 2069, and it's likely to continue higher and start moving towards that 2084 target above. I'll show you where that 2084 comes from. It's the point of control of the 18th, although that's a wide amount of range there, 30 points, not likely, but in either case, I'm looking for this to go back up, test these areas, and if it does, it's likely to break through the other side of these 2 days of balance. Hypo 1. Hypo 2, push up, meet advertised price towards that 62 area, 62.25 area. 62.25, by the way, traded a ton yesterday. There was a lot of liquidity at those prices, as we saw on the S5 Bookmap, for those who have that, and then it turned over. I'm expecting it to turn over and then start walking its way down to the key target of 2045.50. Hypo 3, unable to find buyers at all, and then starts to have an OTD type opening, an open test drive, or an open rejection reverse down to 2045.50, and that's the third scenario. With the driving type behavior, the target becomes 2030 below, which is only 25 points, and that's well within this product's ability to attain. So those are the three hypos. A quick look at the SPX chart. So when I put a time-based profile, since there's no volume in the SPX, because it's an index aggregating all aggregating all prices from the S&P 500, you could see here that we've moved back into this high volume area that we've had from the beginning of the year until the break lower in August, and we've moved into it, and we've basically hit the value low time-wise on this composite profile, and we're pulling back. There's a lot, like I've said before, there are a lot of structures below that are not fully auctioned. There's a pretty good pullback here that fueled the next move. Then there's a pullback here that fueled the next move. But overall, This could go quite a ways if it drops, but we did push into this value up against this profile and have hit the value low, and we're likely to have a pullback here before we gather the energy to push up towards the 2102 in the SPX, in the cash index. Yesterday we had a turn lower. If you look at this green line, you can see it's turning lower. That's the number of stocks making 52-week highs on the New York Stock Exchange. Yesterday, even though it was a completely sideways balanced day, the underlying market was weaker here and here. So this is important to note. Let me switch this to a higher time frame. So okay. So this is the S&P 500 breadth. This is basically the advancers minus decliners on the S&P 500, and you can see that despite the fact that we have been in balance for 2 days, the overall sentiment and the overall breadth has been going lower. So this here represents Friday. And this represents yesterday. Yesterday, the breadth could not get above zero, again, even though prices were completely sideways. We traded inside of the prior day's value. We had Friday being a sideways day, higher. Remember, we had a pop up and we couldn't fill the gap, and yet Friday versus Thursday, the breadth was lower, and then yesterday the breadth was even lower than that. So what this is showing is the market is likely to be running out of steam as it moves up. So this is why I place a high probability on it going lower, not necessarily today, but it seems to be running out of overall breadth to push higher. The last thing I wanted to look at is crude oil. Crude oil has been in balance for a long time. It was in balance since the recovery after the last week of August, and has sat sideways for an entire month and about a month and a half, and it finally broke higher to 51.41 and has done nothing but drop. So let me clean this image up here. A lot of clutter, so it looks like a bunch of spaghetti on a screen. Let's clean that up a little bit. So you can see that crude has been pushing lower since. If I put a composite on this crude from the low, basically what we see is 43.21 being the lowest price since the pop up, and we took it out this morning. We're trading 42.88, 43.21. So what we're doing in crude is we are trading in this LVN zone. There's very little here to keep crude from continuing to fall, the target being 40.21 in crude oil. So unless some intervention or something changes with crude oil, the sellers will likely to continue to dominate the move back to retest and backfill some of this rally that we had at the end of August. Very interesting trade there for those who have abandoned crude temporarily. You might want to pull it up and have a look at it. As always, mind your risk. I'll leave you with that. I've gone over my time. Hopefully you found this useful. I welcome feedback on Twitter or at futurestrader71.com in the contact page. I'll catch you soon. Take care.